Hello everyone, welcome to this week's edition of the Gann and Fibonacci review. Today what we're going to do is to have a look at the chart for the Australian index. This is the top 200 Australian stocks combined together, and it gives us an overview of the trend and the direction of the general market. What we're going to do is to have a look at one of Gann's favorite numbers, the number 144, which was, of course, part of the Fibonacci series. It's a significant number, and in the last 25 years or so of trading, I've never stopped being surprised at how important and significant this number is, whether it is in calendar days, trading days, weeks, or months. What you'll find is that it can be a signal for a change of trend or direction, and if the market looks like it's getting ready to change around this number, then you need to be on the spot and to manage your position effectively. Now, to give you an example of what we're talking about here, in Optima, there's several ways of doing it, but I'm just going to show you today the trading day intervals tool. So if I click and put this on any particular point, whether it's a high or a low, and what I'm going to do from this point is just simply draw a line 144 days, 144 trading days from the starting point. So let's just line this up. You can see if I put that on this day, this high here, December 1, 2023, 144 trading days later, I'd be watching the market for any kind of signal of exhaustion or potential change of direction. Now, what you can see through here is the market's been running up for a few days. On day 145, on July the 4th, the market has a very small day. The next day is an inside reversal bar. And that tells me that this run here has every chance of creating some kind of a counter trend or reversal. And it might last for 3 days, or 3 weeks, or 3 months. So depending on your trading plan and how long you like to be in a market, for example, you could be looking at this, and if you're a shorter term trader who likes to hold for a couple of days, you can be getting short at the signal, because what we've now got is a time factor, and we've also got a market pattern, the inside reversal. Getting short at the break of the low here at around 72.43, and then following the market down when it breaks the high of this bar here at around 7100, then you've picked up around 140 points of profit in that trade. $10 per point within 3 or 4 days, you've just made $1,400. And it was all due to the fact that we recognized that there was a potential time factor which could reverse the trend or direction. So if we just simply move this across, you can see if I started it from this major low here on January 3, there was a significant turning point in July of 2023. If I move it across to the next major peak in February 6, 2023, again, there was a significant reversal within 1 or 2 days of that date, and the market went through a serious decline. If I move it to the next major low, which occurred here March the 20th, you can see right on cue the market was running up for 6 or 7 days. It then reversed from 7,100 and dropped over 300 points to below 6,800. If I move it across to the next top, and that high occurred April 17, then you can see through here that the market just went through a dance. Now, I don't expect every single count to be a fantastic trade. That would be just naive. But what we do is we're prepared for a change of trend or direction, and if one comes, then we can put a position in. But this proves why you must always have a stop loss, because markets will not always do what we expect them to do. If we have a look now, we can just move this across. Let's just move it to the next significant low, which was here around July 10. And you can see right on cue, the market was running up from the January 18th low, and it ran up about 300 points. Within a day or so of that, you can see now that the market has started to come off a little bit. And again, it just means that you've got the ability to watch and manage your trade effectively, knowing that there could be a significant reversal in play. On the other hand, if the market does reverse for a couple of days and then breaks around and breaks above these tops, That just tells me that the 144 count was a weak signal. And if it's a weak signal, then the market is very likely to continue in a strong direction. So if it can break above 7,700, then I would expect to see it continue to rally. But we'll see what the market does. But the important thing is that the 144 count that Gann wrote in his books and said was one of his favorite discoveries in trading, as you can see, can create fabulous reversals. All we need to do is to watch and wait and see what the market does at this very significant turning number. I hope that makes sense for you, and of course, any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Gann and Fibonacci technique in trading. Bye for now.